Hey there, here's a great strategy to keep in mind as the market starts to soften a little bit on the selling side and sellers are willing to negotiate with buyers and maybe hear about some creative financing to get them to the finish line. So, I want to talk to you real quick about an appraisal gap strategy that includes using the K-Fit money that's available through PHFA. And just real quick, without going into the details, if we have a property that appraises and sells for $250,000, borrower has a payment of about $21.25 a month with cash out of $20,747. Now, let's pretend that same property that sells for $250 appraises for $237.5. I know that's extreme. However, if the property appraises for up to 5% less than the borrower agreed to pay for it, if they didn't employ the K-Fit strategy, yes, their payment would go down because now their loan amount is going to be based on the lower of the appraisal or purchase price. So they get a slightly lower mortgage payment. But look at their cash to close. Their cash to close is going up $12,000 because they have to come up with the difference between what the property appraised for and what it actually sold for. Now, if we employ that appraisal gap strategy, again, house sells for $250, appraises for $237.5. We employ that 5% difference available through PHFA, and look what it does to the buyer's cash to close. Brings it right back down to what it would have been at full price, but it also reduces the payment by about $70. No, about $70. So if we keep in mind that we have that K-Fit money available just as a Band-Aid, this is representative of first-time homebuyer money, conventional financing available through Home Ready. But if we had to switch to PHFA, the interest rate stays the same. The only contingency is we need to ask for a wood-destroying insect certification to make sure that it meets PHFA's guidelines. If you have any questions at all, reach out at andy.loan.com.